Hey guys, so in today's video, I'm going to be showcasing and breaking down this beautiful 1 to 1.5 risk to reward trade that we took on US30 just the other day inside of the VIP group. Now, not only that, but this trade actually hit a full take profit, which means we made $1,500 and everyone inside of the group was able to take this with me because I actually sent it out as a signal. So I really need you guys to watch this video all the way to the end because I'm going to be showing you exactly how you can also enter these A+ setups. So first and foremost, what we have to do is replay our chart so that we can gain an understanding of exactly how the higher time frames looked. So going up to the daily, first and foremost, we can see that we are very heavily bullish. So let's take a look at market structure. We've got a higher high, higher low, higher high, higher low, higher high. Therefore, we can now understand that we are very heavily bullish and we've just broken below this previous higher low, indicating that the markets have turned bearish. So now this technically is our lower low. But if we go up to the weekly time frame, what we can notice is that we are still heavily bullish. We've put in a higher high, and now this can be seen as our higher low, and we've got this massive area of inefficiency that price is looking to target. And as we can see, price has just not even closed yet, and we've got this massive wick, which indicates that price is having a reversal back to the upside. So having understood that the weekly is very heavily bullish, coming back down to the daily, what we can start to do is we can start to understand that yes, we've had a market structure shift right here. However, on the daily, that means we are bullish and we've also got our last point of demand sitting all the way at the bottom of this range. Now, the reason why this is our last point of demand is because if price breaks and closes below this level, that means that on the weekly time frame, we've actually gone ahead and flipped bearish. So this being our most prominent low, this is the area where if we break, we flip bearish. We have to make sure we watch out, and we see that when price enters into this demand zone, we get this massive reaction out. Now, what does that show us? This reaction tells us that price is looking to move away from this area with all of this volume. So when we start to see this, we can start to understand that yes, we are bearish. However, on the daily time frame, we seem to be bullish. So we can stick with the bullish narrative and we go down to the 4 hourly, and coming down to the 4 hourly, we can start to see that we've got all of these inefficiencies inside of this daily demand zone. So now we start to wonder, what can price do when it enters into this zone? Being an intraday day trader, we're not looking to hold positions for numerous amounts of days. We're not looking to hold positions for weeks. We're looking to get in and out of positions on the daily. We're looking to get in and out within a few hours. So that means we don't really have to worry about the entire overall structure because we're looking to get in and out on the same day. So we realistically need to know what's going to happen on the same day as opposed to that week. So coming down to the hourly, what can we start to understand? Well, we can start to understand that this is where expectational order flow starts to play a big part in our trading. So we can see that we've got this lower low, then we've got a lower high, then we've got a lower low. So now expectational order flow tells us that we should anticipate a lower high and then a continuation lower. Because in terms of structure, when we see a lower low, we expect a lower high and then a lower low. That's just expectational order flow, right? So now, if these concepts are something that you guys are struggling with or it's something that you don't really understand fully, then I would highly recommend going down in the description and clicking the link to become part of the VIP group, because inside there I have a full A to Z trading course which teaches you everything you need to know, such as market structure, liquidity, fair value gaps, order blocks, order flow, premium versus discount, entry schematics, you name it. It's all in there, even expectational order flow. So if you do want to learn, then I would highly recommend clicking that link down in the description. Not only that, but it will also give you access to my VIP Discord where you can follow along with the daily trades that I send, the daily futures live streams, everything that you need to know in order to become a consistently profitable trader. But let's go back into this trade breakdown. So now that we understand that expectational order flow is telling us that we should have a lower high, that means that technically we are bullish. So going down to the 30-minute, again, this now solidifies that we are looking for buys, because if we can get a lower high and then a lower low, On the intraday, we're expected to go higher, which means we can safely look for buys. And then when we get into an area of interest on a higher time frame, we can start looking for a short position. So with that understanding in mind, we now come back to our trading strategy. And the trading strategy that I teach inside of the group is actually the Judas swing strategy. So for the Judas swing, all we have to do is understand where our Asia session time frame is. So now the Asia session range for me is between the hours of midnight and 7 a.m. UK time. So if I mark this out, there is midnight and right there is 7 a.m. UK time. So within this time, what I really want to understand is what the Asia session is doing and where its highest and lowest point is. So this is the lowest point of the Asia range, and this ends up becoming the highest point of the Asia range. Now, the reason why we mark this out is because we're going to use this as liquidity to move forward to frame up a trade. So now that we've got our Asia range, we're now going to identify the higher time frame, which we've already done, and we know that we're going to be looking for buys. Therefore, with our bias being on the buy side, what we really want to see is a sweep of the Asia lows so that we can take out all of this liquidity, and then from there we can start looking for buying positions. That would fit the entire narrative of our expectational order flow being bullish, and that would also fit with our trading strategy where we need the markets to sweep the Asia liquidity so that we can take trades in the opposing direction. So now that we've understood all of that, we've identified our higher time frame bias, we've identified our Asia session range, we now simply are going to wait for the markets to come and give us a sweep of the Asia lows. And as you can see, we get a sweep right there. So now once we've got the sweep of the Asia lows, this is where the hard work begins. We now have to identify where we are in terms of our structure. Now for me, this entire leg would be classified as one move down. Therefore, this is our lower high, this is our lower low. So now in order for us to get a market structure shift, price would have to come all the way up here. And if it does that, it's going to take out the Asia highs, and that would actually be our targets for this session. Therefore, that would invalidate the entire setup. So now we need price to give us a little bit of a lower push. Now, for me, this wouldn't classify as a new low. Why? Now, the reason for that is because it closed with a wick. For me, this is a sweep of liquidity, not valid structure. I have to see a body closure below this low in order for me to start considering it as valid form of structure. So if I continue to play price on, we can see that price then does eventually give us a break of structure to the downside. However, for me, this is our lower low, this is our lower high, and now this becomes our lower low. Now the reason for that is because on the lower time frames, this is just consolidation. This didn't break anything. This didn't give us any mitigations. This didn't give us any liquidity sweeps. Nothing. This is just pure consolidation. However, right here we can see that we've got all of this impulsive move to the upside, and we've got this impulsive move to the downside, and it's also left this area of beautiful inefficiency which overlaps with each other. Now this area can very well be targeted by price, where it can come up, give us some sort of mitigation of this entire area, and then it can continue down from there. Now I need you to pay attention to this, because as we can see, price then does come up, taps into that area, and then what does it do? For anybody who would have taken any sort of trades with their stops below this low, they now would have been taken out of the markets. So we have to understand our market structure as well as everything else in order to execute these trades at a higher level. So now, once we've understood that this no longer is a new low and that this is our lower high, lower low, and we need to break above here in order for us to get a market structure shift, we've just saved ourselves from taking a stop loss. So let's mark this out. We've got this as our market structure shift. And until we break above that, we're not going to enter any positions. So now if I continue to play price on, we can see that eventually price does come up and give us this massive push to the upside. And that's another key thing that I'm looking for when I'm entering into a position. I don't want to see price come slowly all the way up and then give us a very slow break, slow market structure shift. I want to see market structure shift with intention. I want to see a bunch of volume come into the market and give us that new extended move. So now what's happened? We've had a lower low, lower high, lower low, and then from here we've now broken above and put in a higher high. So once we've got this higher high, we can now anticipate that expectational order flow tells us that we get a higher low and then we get a higher high. So understanding all of this now, this is where we can start to find an actual trade for us to get an entry into. For me, I'm going to take my position at the area that caused the market structure shift. Now, the reason for that is because there was so much volume coming out from this area that for me, through my backtesting, I've learned that price sometimes does not like to retrace too far. So having understood that, I'm going to take my entry at the area of the market structure shift. Stops go just below the low right there. And then we're going to target the opposing liquidity. And for this trade, we was actually targeting the Asia highs. So now once we've done all of that, we can now safely enter into this position. Now for other people, you may be interested in taking a position down here into this fair value gap, which would work out the exact same. Maybe you would have put in another 0.1% onto the trade and you would have made that. However, for me, I decided to take it right here at the area of market structure shift. Now, if I go and backtest and I learn what price does, I'm going to start to see things a little bit more clearly, which I tell you guys to do as well. I would highly recommend that you backtest this strategy so that you can also learn how price behaves when it does particular things. As we can see, as I said earlier, I don't want to see a slow market structure shift because I know if price does that, 9 times out of 10, it's going to come back and take everyone out. I also know that I need to see market structure in a different way because I know if I had counted this as my new structural point, then this trade would have also taken everyone out. And because I'm responsible for making sure all of the members inside of the VIP group only take high quality setups, I have to understand all of this. So once you backtest, you will also start to understand this. And if you join the VIP group, I can also teach you in there. However, we took our stop losses right there, TPs just up there, and that was the end of that. So then I've actually gone ahead and sent this trade into the VIP group. As you can see, we've got the US30 buy limit. I've got my entry area, my stop loss, and my TP all posted in there for everyone to take with me. And then we simply sit back, wait for price to give us that nice tap in. And then from there, price goes and hits our take profit. So it's a nice and simple trade, but you have to understand what's happening overall. Because if you don't understand, then you're going to end up taking these lower quality trades where your stop losses are going to be hit more times than not. So I would highly recommend that you backtest this strategy. And if you want more help, then join the VIP Discord. And the link for this is down in the description so that I can mold you into that consistently profitable trader. But as you can see, we smashed TP and everyone was able to get into this trade with me and we all profited $1,500. That pretty much wraps up this video. I hope you got an understanding of exactly how I frame up my trades and how I break down the high time frames to get into these A+ setups. So if you are struggling with your trading or you don't feel confident or you just need that little bit more help, then I would highly recommend clicking that link down in the description to either join the VIP group or join my free Telegram so that you can send me a message with whatever it is that you're struggling with so that I can help you out. But if you did enjoy this video and got some value, then don't forget to leave a like, comment and subscribe. Well, on that note, I'll catch you guys in the next video.